The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the January set of USDA reports, one of the biggest data dumps of the year, definitely gave us some surprises, which we typically see, and by and large, a friendly day for the corn and soybean markets. We're going to take a look at all of the numbers, or, well, most of them. There's a lot of data to go through, and we're going to get report reaction as it is our January USDA Report Roundtable here today on Market Talk. Joining us first, DuWayne Bosse with Bolt Marketing. DuWayne, it's good to talk to you again, buddy. I feel like I haven't talked to you in a year.
I know. Well, I think you asked maybe once or twice, and I think I was sick with influenza and, Jesus. Kids events, it's all right. Yeah. But yeah, I suppose technically it has been a year, hasn't it?
Yeah, technically it has, but good to know you're feeling better again, and great to have you with us today. Also joining us, Kristi van Ahn-Kjeseth with Ahn Company. Kristi, have you caught your breath yet after report day Friday?
I'm trying to. There are very few things that frazzle me, and today was one of those days that it was like you felt like you couldn't catch up, right? The phone calls, the movement of the market, and the excitement. I mean, like, when was the last time we were able to be excited about these markets? So it's fun, but it gets to be, like you said, it was a lot of information thrown at us today.
Absolutely, and we won't have time to go through every single piece of data, but let's go through some of the big ones. And I think top line first was the 2024, what they say are the final yield numbers, production numbers, etc. A big cut to corn yield, a cut to soybean yield, about a bushel on the bean side, and it was almost 4 bushels on the corn side. I guess let's start here. Kristi, your reaction to the yield cuts.
Yeah, that was the point that got the market's most attention, right? So you're going through, and I will say I saw the carry out level for corn first, and I was like, oh, 1.5, and I was like, woo! And then all of a sudden you're like, how did we get to this point? Because demand has been running hot, but to cut that much, and then you look at the yield, and that cut, you wiped out 276 million bushels in one swipe from the corn market, and it's been quite some time since we've seen that kind of cut from a market. And to be honest, USDA, this isn't typically like them to just slash it. They've had multiple opportunities to fine tune this number coming in. And so the fact that they just decided to slash it so much caught everyone off guard. It was exactly what we needed to get the corn market through some key resistance points. We were up against this 455 to 460 level, and just seemed like we were stuck here. So it was enough to get it to move, which was really great to see. That is the final number for the most part. And so, that's not going back and forth of saying, hey, are we going to move forward and see higher production? This is what we have to work with now. And now you're in the job of saying, do we need to ration demand to a degree? And I don't think we're there yet, but with demand running as hot as it has been, it's going to be a definite question moving forward.
DuWayne, what's your take on those yield cuts? And we'd heard a lot of talk from some producers that they felt that those numbers were going to come down. Did you expect that big of a cut?
No, I didn't. Is this where I'm supposed to lie and make it sound like I'm really smart? No, I didn't see these cuts coming. But you're right. I heard it from our clients, producers too. We're in Northeast South Dakota. You hear from a lot of people of like the yields weren't that great. My answer every time was, but Iowa and Illinois, guys. And here we had Iowa and Illinois still at record corn yields, but we still couldn't get above 180 for a nation. So that's pretty interesting to me. A lot of talk of like just 180 is just really hard to achieve. And I guess it is. Obviously the dry end of the summer hurt beans more than it did corn, and 179 is still a good yield. But I think it was very interesting to still have record yields in those two key producing states, which really matter a lot. Whenever you look at a spreadsheet, the amount of acres they plant and the yield they get moves the needle. South Dakota, North Dakota doesn't, sadly, but evidently we pull it just enough though. So it's very interesting and has me very happy today because like what Kristi said, 276 million bushels just slashed off. This isn't an estimate for later on. Those bushels are gone now. So I love that Kristi used the word ration demand. Like she said, I don't know if we have to do that yet, but just the fact that that's even in the conversation now is just makes me happy as hell.
I'm going to pull this up on the video feed and shout out to Karen Braun at Reuters. She does so much great work on her social media accounts, and I'm going to beg for forgiveness later if I'm not supposed to share this from Karen, but this is her rundown of the state-by-state corn yields. And I know Minnesota, for instance, Kristi, you were curious about that number, especially considering the flooding we saw in Minnesota, parts of eastern South Dakota, northwest Iowa. 174, is that still a little high maybe?
I think maybe it is a little bit, but it is what it is now. I think everyone's happy that they adjusted that corn number out of Minnesota. So I would second that. When you talk about Karen Braun, she puts out fantastic information on Twitter. She, if you are looking for some facts, some non-biased information in an easy to read format, definitely check out Karen on Twitter, because it's charts like these that make it so easy to be able to digest information. And when you look at it, you can see Minnesota is one of those ones. And if we rewind back, my journey in corn has been a rough one this year, because I had to travel that stretch of a lot of drowned out areas, a lot of slow moving corn, a lot of crappy looking corn for a very long time. I went on my girls' golf trip in July, and there was still some very short corn, some open fields throughout that stretch through southern Minnesota. And so it got the best of me for a little bit, saying, man, you keep talking about how much corn is here in Minnesota. It's not here. And so I think it's nice that you're finally recognizing this, that you're saying, hey, the corn isn't there. I think you've seen it in basis levels through Minnesota. One disappointing factor for me is not to skew off of the numbers, but basis levels have widened out almost all of this rally so far in so many areas. So corn market up 25 cents in December, I think so far. Prior to this report was up 33 cents. And now you added another 14 cents on that. Basis has widened out 20 cents in some locations. So we're not getting anywhere on the cash side of things. But I think that's also just a testament that there are areas that do have corn. And I think, you look at the Dakotas, Iowa, Illinois, like you talk about, not so much South Dakota, but North Dakota. I think that those yields were there. It's just, those places you really counted on and thinking you could pull it like Minnesota just weren't.
Absolutely. Absolutely. I want to pull in the ending stocks here. DuWayne, I'm going to come to you for this. When we take all of these estimates into account here, and we start to kind of sift through this data, when you start to look at ending stocks, to point earlier, I believe, are we starting to get a little snug here? Do we need, to Kristi's point about rationing demand, are these numbers, in your opinion, starting to get a little tight?
Oh, absolutely. And it's how they got there too. We've talked so far about the supply side, the production cut, right? But they cut demand as well, which I really don't agree with. Now, 50 million bushels from feed and residual, it's hard for me to argue that one, because that could be residual from 2 years ago. I don't know. But to me, we're going to feed these animals to heavy weight. So I think feed demand is still high. But yes, of course, there's less cattle out there. So, oh well, that one I can let go. It's the export demand. I had export demand up 25 million bushels from last month. USDA decreased it 25 million bushels. Maybe a small deal, not a big deal, but either way, they had to tweak demand a little bit to get that 1.54 billion bushel ending stock. My ending stock's a little different. I'm at 1.437. So I think it gets even tighter, because I think demand's a little better than what we're estimating right now.
Kristi, your thoughts on the ending stocks?
Yeah, I would agree with that demand side of things. The only thing I can really imagine is if USDA is coming here and trying to be a little cautious that you could have that tariff conversation in 1 month from now. That's the only thing I can see. But, the feed one, the weights are really heavy. And I think part of the reason why you continuously see people being willing to buy expensive cattle right now is that they have cheap corn to feed it. And so I think that feed number could justify being higher as well, like DuWayne said. Same with export numbers. Our export demand is very, very hot right now. The question is, moving forward in a new administration, do we see it continue to be there? And it's days like this, prior to the report, our weekly export sales were horrendous. I took a look at those numbers and I was like, oh, let's just start the day over, man. Like, these are not pretty numbers. I know it was over a holiday trade, so you were expecting it to be low, but they were even below expectations. So we need to make sure that that US dollar isn't affecting our demand structure, because I think that plays a big role into it as well. But overall, when you look at it, you look at these numbers and you're like, they are a lot tighter than we thought 6 months ago, a lot tighter for corn and soybeans. But if you were like, what number sticks out? Wheat ending stocks, man, they cannot come together. And we even increased our imports of wheat here in the US. Pretty much just saying our wheat is too expensive. We're even willing to buy it from other countries and bring it in, which is really not what we want to see happening. So as friendly as it was on corn and beans, I would be very nervous to see what wheat would have done if you didn't see the strength that you saw in corn and soybeans today.
Kristi Van Ahn-Kjeseth with Ahn Company, DuWayne Bosse with Bolt Marketing joining us for our USDA January Roundtable. I'll pull up the quarterly grain stocks here, just get some thoughts on this real quick from both of you. Anything with the quarterly numbers here, DuWayne, that tying this all together? Anything big stand out to you here?
No, nothing really stood out here. I mean, to me, obviously the quarterly stocks for corn and soybeans were lower than the trade estimate, but I think that's just has to go back to the cut they did in yield for the most part, right? Maybe this weekend I can break it down a little bit more to see, where feed usage is, things like that. But it's also kind of why I'm stuck on the whole corn exports. Our export inspections for November and December were actually higher than what the weekly inspections report was. So I don't know. I still think export demand is good, and that quarterly stocks kind of shows it as well. But yeah, so that's about all I got.
All right, Kristi, anything for you on quarterly grain stocks?
I thought maybe if you would see a surprise out of the market, it would be in quarterly grain stocks, and it wasn't. It was very close to expectations, nothing to even break down or really talk about for the most part. So I didn't see anything there, and I was wrong on my guess on what would be the surprise. I did not think you would see that yield change like you did. So it was very quiet.
All right. I want to circle back to what you mentioned just a minute ago about wheat, Kristi. The all-winter wheat seedings and canola seedings report out as well. 34.115 million acres of winter wheat seedings. That was above the average trade guess, and largely, had a great day in corn and beans at the close. Wheat, though, not so much. This wheat market just continues to be a dog. I mean, any thoughts on the wheat side of the ledger? Kristi, you want to take that real quick first?
Yeah, I'd like to know who's planting more wheat. I'd like to have a conversation with you, to be honest. So, but when you look at wheat for the most part, your carryout levels, your winter wheat seedings, there was nothing friendly in that. I do think that the world dynamic of wheat, the carryout levels, especially if you take China out of it, could be friendly if you could get some sort of other set of information to be friendly. Who I run the business with, my brother-in-law, Jim, he drove down to Texas over Christmas and back, and he said winter wheat just looked phenomenal as he was driving through it. And so not only are you seeing those acres, but I think that you have just put so much moisture and good conditions for this crop. When we planted it initially, it was really dry, and we have to remember planting in dry conditions actually ends up being a favorable thing if you can get that moisture on top of it. So I get nervous about where we can dig ourselves out of this hole with wheat. I think that spring wheat has potential. I think if you want to talk drought moving forward, it would come from the west. So I do think spring wheat could separate itself out. But other than that, I don't know what else you're going to build off of this. We're hovering right above contract lows for the wheat market, and it just seems like we cannot get going here. The US dollar is obviously playing a big role into those wheat exports. I think that is something that we really need to pay attention to and say, hey, we need to get this US dollar a little bit lower. Otherwise, we are just not going to pick up the demand side of things.
DuWayne, anything for you on wheat?
I suppose, is it really bad radio if I just say ditto?
Right.
Kristi kind of really nailed it there, though. I mean, she did. It is disappointing, the wheat. I look at a chart, and of course, the flash right after the report, we went higher. So we made a higher high than yesterday. But of course, before the report, we made a lower low. So there was a chance if we closed near the highs, I could do one of those, that's a key technical reversal higher. But it really looks pretty sad. And to Kristi's point, the trade action just looks horrible. You got the corn up 15 cents and you can't even go green with wheat. It is bad. Now, she's dead on with everything. It really struggles the U.S. dollars and anchor. Wheat, I don't know. I got this weird feeling it could be a bull in 2025 because of the lower global production. But we need a story. And even more than a story, we need a drought talk or something here in the U.S. Because to Kristi's point, nobody wants our wheat. And if that's the case, then we really aren't short any stocks. So yeah, wheat was kind of definitely the blah, kind of a nothing burger in this report for sure.
All right. I want to get some risk management price perspective from the both of you. DuWayne, I will start with you. With a good closing quart of beans on Friday, I would have to think that this is going to be a prime opportunity to reward the rally. Kristi made the point earlier about basis widening out, though. I mean, I guess from your perspective, what are some risk management thoughts you'd want folks to think about?
You know, you're catching me almost early on this, but it's a great question. I feel like I always got to digest the report a little bit, but I'm going to go back to the same target I had before. We were talking above the 468 in March corn, all the way up to 480. That was kind of my window to sell old crop corn. I've been asked before, can corn get to $5? And my answer's been, well, if it does, I won't have any left as a producer. And I think even though this is a bullish report, and my numbers even more bullish than USDA, I think you have to stick to that marketing plan right now, Jesse. I mean, this is the highest we've been since June, May. So you got to reward it. I'm happy. And I'll just quickly jump into on the soybean side of things. Even though the ending stock got decreased quite a bit here, those world stocks are still a concern. Brazil's crop is going to be large. Same thing. I mean, we're pretty much sold out on beans. I just didn't like the bean outlook. So we still have the corn. So like I said, I'm going to sell corn up here around that 475.
And to your point, South America, no changes to Brazil and Argentine production on USDA's report drop. Kristi, risk management thoughts from your side here looking at the grains.
Yeah, for a couple of weeks, we have been 100% marketed on old crop corn. So a lot of that has to do with just puts. I feel like corn puts are cheap right now. And so we've been doing rolling up those puts, converting those puts into some sales. We did move on having some ownership on our previous sales today because we did feel like if corn could get above this 460 level, it opens up some targets and really can, see some movement if it wants to. So we added back a little bit of ownership. We previously had no ownership on for the corn market. Now we have 20% on. If you can kind of continue with this strength, I think it points to 492. That's like 22 more cents. So we're not talking a huge move in the market, but we did want to have some form of ownership on it. And then we also moved on the last bit of soybean marketing today. So we've been 90% marketed in soybeans for quite some time. We are now officially 100% marketing. 1027 was a level we were watching for quite some time off of March soybeans. We got to it, so we decided to move on it. Preferred strategy, just making a sale, but you got to figure out what works best for you, and no form of re-ownership in soybeans either because, man, I don't know, it just doesn't feel good. And I will say that when everyone leans one direction, it's very easy to rock the boat. And I think you have everyone leaning on the bearish side right now for soybeans. So if you were to see kind of a surprise, I think you could see soybeans do something, but it's got to prove it to me first, get above probably like that 1043 level before I will take soybeans seriously that they could have some more topside. I just don't believe it right now. And when you talk about your price forecast and your targets, I think the most disappointing thing for me today, besides every single wheat number, was the fact that corn was able to run 12 to 14 cents and new crop was up 1 to 2. Yeah. And I really would like to see new crop do something because I would really, really like to get some corn marketing done before the March 31st crop report. I think that you are going to see a pile of corn acres planted in the U.S. It's very concerning to me that you could just flood this market with corn. And so that's where I see this big separation happening in corn right now between old crop and new crop. And I'm really hoping that you could get March to 492 because that would get us to some price levels, most likely to do some marketing for the new crop corn. Don't really have those targets for new crop beans at this point.
DuWayne, I'll let you respond to the new crop piece there as well. That's a great point Kristi brought up. Anything there for your perspective?
That was good too. Let me back up first. And obviously Kristi and I were the same way. We were bearish soybeans along with almost every other broker on your show, right, this winter. And I know it'd be easy to look at the rally today and be like, oh, you guys were wrong. But all week I kept telling my clients that the only way you get a bullish report is if USDA surprises with a yield cut here. And that's just rolling dice. I mean, I'm thrilled they did because it tightens up the ending stock, right? And that just will help core and everything else. But this is a surprise. And if you are smart enough and you have soybeans left, dear Lord, you're lucky and let them go. Yeah, so
Bye-bye.
No, right. I mean, good for you, but you were pretty lucky there. Brazil's crop isn't going to get that much smaller. But I will admit, our tighter ending stocks all of a sudden made Sunday's night forecast for Argentina even more interesting. So that'll be fun. Stay tuned. Now I'll actually answer your question, Jesse. The new crop, I'm right with Kristi. 450 is where we wanted to start selling new crop. Did we do a lot today? No. You know, it's hard to get farmers to sell on a bullish day, but it's okay to start here. Now, yeah, my ending stock is pretty tight, but I've got to do something. I've got to sell the old crop or start marketing the new crop. I can't have two crops sitting out here. For soybeans, I'm not going to change it that much. I thought if we can get lucky enough to get above 10.50 to $11, that's a narrow range for soybeans. I think I'd lock it all in. Hedges, puts, something, because I don't know. Hey, we could still end up with a pretty ugly number for soybeans at the end of 25.
I do want to bring up a couple other news notes for us here real quick since I have you guys here. Late Friday, we're getting 45Z clean fuel production tax credit news. I'm already starting to see some reaction from ethanol, biofuels groups. It's a fairly mixed reaction. By and large, it sounds like this is not going to be a complete set of details. Just wondering, I mean, this whole 45Z picture, does it feel like these markets are going to react to them at all? Do you guys think?
I think bean oil likes it a whole lot, and it should. You know, I think come Monday you're going to get the announcement though that, you know, there'll be a public hearing period. This is you know, what they recommend, and it's going to take a little time, and that might take some of the shine off the pop here. But I don't know. What do you think, Kristi?
I have a hard time even wanting to pay attention to that information with a change of administration, you know, and it could stay the same. It could get better. It could, you know, it's not, please don't take that as saying it's going to get shut down, but I have a hard time really reading into any of these details when you know that not only the administration, but the whole outlook of the government is going to change. And so, I mean, maybe it offers a little bit of information. You could say it's a little bit friendly bean oil. I also think crude oil being up over $2 was such a help to bean oil. So I feel like it's a nothing. And I feel like when you really want to pay attention to something, what are you going to pay attention more? The really friendly report that you had that finalizes some protection, or something that may happen for clean energy. And I think people are just going to say, I'm not going to waste my time on it until I know it's some firm details.
All right. I appreciate the responses on that. +2, stocks down sharply, dollar higher. We had that big jobs number out Friday. So there's a bunch of macro stuff that these markets still got to digest too. And then don't get me started on the cattle market as well. That's been on fire. We got more new all-time record highs in cash country. I guess, you know, thinking cattle, thinking outside markets. You guys have any thoughts on either of those, DuWayne?
Yeah, love it. It's been bullish cattle. It's great. Cash higher, you know, I thought it would take a little bit longer into 2025 to get $200 cash, but here we are. And now we're passing 203 and getting 204 in Nebraska. Wow, it's amazing. But the trade action looks bullish, but there gets to be a point in time where how bullish Kristi and I are on the cattle doesn't matter anymore. And I think for producers, we're getting to that point. Now, I'm pushing a lot of LRP, put options, you know, straight board, whatever you want to do to sell next year's calves. I'm not crazy worried about upfront if you're selling the next week or two. I think you still should have some production too. But or if you're a feedlot and you've got the feedlots full and you're looking at April for delivery, like I think you have to do something. Like I said, the trade action and the trader in me says this thing looks great, looks like it can keep going, but you just don't care. This is a risk management thing. You got to do something with protecting these profits because I do think we top in 2025.
Kristi, anything for you?
Yeah, I'd agree with the top in 2025 comment as well. Seasonally, we maybe have like a month and a half, 2 months left for these markets, but otherwise, then you really have a very strong seasonal to come down. And I'm also struggling with somebody that wants to be bullish cattle and bullish corn at the same time. I think you have to pick one or the other. And especially at the price level that we're at, we're up to some fourth price counts in live cattle. You're approaching in between third and fourth price counts on feeder cattle. You're 2 standard deviations away from linear regression, gapped higher and weren't able to sustain it in some of these contracts. And so to me, it just feels a little bit toppy. And that doesn't mean we can't go higher, but this is all some cautionary tales to me looking at it and saying, let's make sure we're doing something. Now, I'm not telling you go short a bunch of futures in your account to go sell it all, but make sure you're putting some, the LRP comment, great comment right there. Also, just making sure you have a line in the sand saying, you know what, I'm going to let this go. But if live cattle or if feeder futures get below this level, I'm willing to step in and say, I'm going to buy something regardless. And just making sure you aren't going to give this all up, because there is a lot of dollars into it. And also, we could be as bullish as we want. Farmers could be as bullish as we want. Cash could be as strong as we want. But if technicals start to take over and managed money starts to liquidate all the length that they have in cattle, watch out, because cattle in general are a thinner market that can really contribute to a downfall.
Well, let me jump in, Jesse. I haven't even interrupted y'all this whole day here, which is quite impressive, but I'm going to jump right back in here because this is a fun conversation. Honestly, after the report came out and corn was up sharply, you watched the back month feeders tip back. And I texted a few people and talking to a few other brokers that we just kind of wondered, is that a short-term top in back month feeders, or is it like the top? And then, of course, it races back up at the highs here toward the close. Makes me go, yeah, see, the trade action just looks good, but it just makes me nervous. Kristi mentioned it looks toppy. It feels toppy. Now, selling futures, I want everyone to be able to sell futures and be comfortable. But I do definitely remember back in 2014 telling a guy, you're at 174 feeders. They've never been this high. How wrong can we be? And then it ran to 240. That's a lot of margin call in between. So,
yep.
If you do sell the board, maybe there's a call option out there, but they're crazy expensive too. I don't know how to do it, but protect them somehow. Like the LRP is probably my favorite thing right now.
I was going to say, yeah. Oh, sorry, Kristi.
No, jump back in. Yeah, interrupting you.
I was going to say.
You can get off.
Jesse, this isn't your show. Stop. Come on. But I was going to say, like you said, calls are expensive. I wouldn't short futures at this point either. Options are really expensive. And I think that's the point you're at, is that you just need to grin and bear it and say, it's not going to be cheap, but I'm going to do something and just bite the bullet, because I think there's too much risk if something does happen. And when you talk about, the last time feeders made that big move, feeders are the type of market that can lock limit for multiple days and never give you the opportunity to get in or out. And so I distinctly remember every day having feeders lock limit higher or lock limit lower. And there you are, pretty much just sitting, waiting for something to happen. And that's what can happen with that market. So just, be prepared that if you're going to do an option, it's not going to be cheap.
Yeah. And this is worse than $8 corn, really. Because when this turns, it's going to just be a slam, like Kristi said. It makes me very nervous. And like I said, I'm going to say again, we've gotten to the point, it doesn't matter that I'm bullish yet. You just got to do some risk management here. And yeah, the options are expensive, but you're making a ton of money too.
I was going to say, you guys actually let me talk today. I appreciate that. This has been a ton of fun, as always. Final thoughts for both of you as we close it out here on the show today. DuWayne, anything you want to reiterate to folks?
Don't get too bullish. It was a good day. It's a good report, but go back and look at your marketing plan. A little tweak here or there, a change in percentage sales is okay, but stick to your marketing plan. Like I said, I was planning on selling around 475, 470 March corn, and I'm still planning on doing that even with the bullish report. So I guess that's my takeaway. Don't get too bullish. Enjoy the day, have fun with it, but don't get too bullish.
Kristi, how about you?
Yeah, same situation. Don't catch yourself, making irrational decisions and not doing something you're supposed to do, especially if you were one of those producers that when the market turned, you just didn't have much sold and it never gave you that opportunity, because that's how corn was. Last summer when it turned, it never looked back. And so there are a lot of people that are very under marketed. And I would stress this so strongly, if you are paying storage on grain in the elevator, stop doing that. Stop doing that. You can buy an option to cover the rest of the time frame if you really want to. I don't have a desire to buy soybean calls right now. I could maybe justify a corn one, mostly because you can get a decent corn call right now that is going to be the same as 1 month of storage being at the elevator. So if you are paying storage at an elevator on that grain, stop doing that, make some sales. And I just think, we are in for a wild ride. This is setting the tone for a volatile year ahead of us. And if we get the opportunity to be making some marketing decisions at profitable levels prior to March 31st on corn, please look at doing something there, because I'm just really worried that we could see corn acres. I think your saving grace on corn acres was that people were pinching pennies, and now we have a government payment coming in. And I think that just sealed the deal on some more corn acres alone right there, especially with this movement. I just think that people are going to say, hey, corn has treated me well. Let's stick with it.
Mm-hmm.
Kristi, if folks want to reach out to you there at Ahn Company, how can they get in touch?
You can call us at 1-800-648-5494.
DuWayne, if folks want to reach out to you there at Bolt Marketing, how can they get a hold of you?
They can call us 605-448-2365.
Kristi Ahn-Kjeseth with Ahn Company. Always good to have you with us. Thanks for being here, Kristi. Appreciate it.
Thank you.
And DuWayne Bosse with Bolt Marketing. DuWayne, good to talk with you again as well, sir. Thanks for joining us today.
Yeah, thanks for having both of us. This was fun.
It is.
Definitely a lot of fun, and that's going to do it for today's Market Talk, recapping the January USDA data dump. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.